Did you just get a surprise 1099K form from Venmo and suddenly feel a chill down your spine? You're not alone. Recent changes in tax rules have left a lot of people confused and worried about their Venmo transactions. Let's clear up the confusion around the Venmo 1099K and what it means for your taxes. Simply put, the 1099K is an official IRS tax form that payment apps like Venmo must issue. It reports the total gross amount of payments you received for goods or services during the year. This is the IRS's way of ensuring that business income from the digital economy is reported. Here's the key distinction you need to understand. It's about goods and services, not personal transactions. Payments like splitting a dinner check, getting rent from a roommate, or receiving a birthday gift. Those are personal payments and are not taxable income. They should not be included on your 1099K. So, who actually gets this form? The IRS has been implementing a transitional approach to the reporting threshold. For many recent tax years, Venmo has only been required to send you a 1099K if you crossed a certain payment threshold for goods and services. For instance, in the 2024 tax year, the federal threshold was $5,000 in gross payments for goods and services. This threshold is subject to change each year, so always check the latest IRS guidelines. If you hit that threshold, whether you're a freelancer, a small business owner, or just selling items online, Venmo sends this form to both you and the IRS. What do you do when you get one? Review it for accuracy. The amount on the 1099K is the gross amount. It doesn't account for refunds, cancellations, or Venmo fees. Separate the taxable from the non-taxable. If your form mistakenly includes non-business personal reimbursements, you need to clearly document that difference when you file your taxes. It's crucial to use the goods and services or friends and family labels correctly within Venmo. Report your income and deductions. You will use the gross amount on the 1099K to help report your business income, typically on a Schedule C form. But here's the important part. You can then deduct your legitimate business expenses, things like Venmo fees, cost of goods sold, and any other relevant operating costs, to find your actual taxable profit. Ultimately, the 1099K is an informational document. Even if you don't receive one, you are still legally required to report all taxable income you earn through Venmo. Good record keeping is your best defense. The best practice going forward is to use a separate Venmo business profile or a completely separate account for any transactions related to selling or providing services. This keeps your personal reimbursements totally clean. Don't panic if you get a 1099K. It's a tool for the IRS, but with a little organization and a clear understanding of what's business and what's personal, you can manage it easily. With that said, thanks for watching, and until next time.